So we're going to go through, we've got a few PowerPoint slides here that we're going to go through first, and then we'll get over into the product and do some demo and show you some different things in the system. So again, today we're going to be talking about allocations. So, excuse me, there's two types of allocations. There's transaction allocations. So these are included with the core Intacct subscription. So they're under the general ledger module. There's no additional cost to have these transaction allocations set up in your system. So those are available for everybody. They do allow you to use those allocations at the time that you're booking transactions. So they're a little different than another type of allocation we'll be talking about in a minute here, in that these are transaction level allocations. So when you're entering in the AP bills, when you're entering in the journal entry, you select that transaction allocation at that time, and it's going to do that allocation of that specific transaction. So it is transaction-based allocations. It's not going to take a month-end balance and split that. It's at the time that you're entering it, you select that, and it's going to allocate just that transaction out. Most of these allocations are typically static amounts, so they're not things that are changing or that are fluid. They're not based on percent of revenue, things like that. So they're things that are going to be a static amount that you're going to set and maybe periodically update. They can be referenced and used in import. So on your import templates, you can select the allocation ID on that import template and enter that in, and then it will import that transaction and allocate that out from that import as well. And these can be used on most transactions in most modules. So you'll see them on AP bills, you'll see them on journal entries, you'll see them in AR invoices, things like that. So when you're transacting in the system, as one of those fields on the transaction line, you'll see that allocation ID, and you can select that, and then that will split that amount. You'll see that they can be based on percentages, an exact amount, or they can be a fixed amount with over-under logic. So you can say that they're going to be specific amounts, but then if that bill is over or under that sum total of those fixed amounts, then what do you want to do with that over or under amount? Okay. So this is just a screenshot of that setup, the transaction allocation definition. So you'll find these under the general ledger module and the setup, but you'll see there you can select your ID for the allocation, and then your percentage, exact amount, or again, that fixed amount with the over under logic are your options on how you're going to allocate that amount out. This is just an example of where you would see that in the transaction. So this is a journal entry that you'll see, and just as I mentioned, in that field itself for allocation, wherever that may be on the line, we may have moved that around to give you better access to that. So it won't necessarily be far over on the right, but you can see that that allocation field is where you'll select that allocation amount or value. And that will then create that allocation. And when you sit on any of those lines, you may have seen kind of that little show details tab pop up on those lines. If you pop that open and then scroll down, you'll see the actual allocation. So in this case, I've got it split between these 10 entities or location fields. So it's allocating those amounts out evenly and doing that even split. So it's just based on a 10% allocation to 10 different entities or locations in there. You'll also see on those details that customize allocation button. So at the time that it does that allocation, you can customize that and override that, so you could change any of those amounts and allocate that differently. That is just going to allocate it differently for that transaction. So it is not going back and updating the actual transaction allocation definition itself. It's just changing the allocation on that specific transaction. Okay. And then this is just an example, same thing, a transaction allocation, but it's in an AP bill. So you'll see again on that line, when I'm entering in that bill, amount. If I'm charging that maybe to utilities and I have my amount there for that, I can select that allocation. You'll see when I do that, that location field becomes kind of grayed out because that's what I'm using in my allocation. And then I've got that even split where it's going across those 10 different entities. You can include other dimensions in there. I just did this a very simple example where it's allocating out based on my location, but you can include other dimensions in those allocations. It can be based on department, and you're still populating the the location. So you'll see in this case on this bill, my department is still showing to allocate that amount out, where I'm still going to enter that department, and that's going to then apply to all of those lines. So any of the dimensions that you have in the allocation itself, it will gray those fields out so that you're not entering those also on that line, because it's picking those up from that allocation. Any of the other dimensions you would still enter on the line on the transaction as you're entering. Then second, we have what are called dynamic allocations. So dynamic allocations is an additional subscription. So you do have to have an Intacct subscription for the dynamic allocation module. When you post to that, it's going to post a little differently. It's actually posting to a user-defined book or a user-defined journal entry. So what I tell people to kind of think about with the user-defined books is if you think about kind of an Excel spreadsheet that you're used to using, you'll have one set of data in one column on there. So let's just say that's in column A. That's your normal set of accrual or cash-based financials, whatever your book is that you're using in Intacct. And then it's going to create these allocations in this user-defined book. So think of that kind of as a second column on that spreadsheet. So what that then allows you to do is in any of your reports, you can select to include that user-defined book for those allocations or to exclude it. So I can report with or without those allocations. So a combined total financial, including those allocations, by including and picking up that user-defined book, or I can see my totals pre-allocation by excluding that. So that gives you that choice on any of your reports to be able to report with or without that by posting those into that separate user-defined book. Your account groups are going to define what you're going to allocate. So you're going to pull in an account group when you set the dynamic allocations up, and that's going to tell the system what balance to take and allocate. So again, different than our transaction allocations because it's picking up, in this case, a full account balance or a balance for multiple accounts. If you pull a group in that's got multiple accounts and you want to take that total balance and allocate that, you can. So it's pulling in from account groups what you're going to define to allocate out. You're then using other data in the system to base that allocation on. So we're basing it on other financial data or statistical data that's in the system. So those are going to be allocation percentages based on other data in the system. So again, different than our transaction allocations in that those are static amounts. These are going to be based on other values in the system and other data in the system. These allocation splits happen after transactions are posted. So you run the allocations based on a different time period. So when you set the allocation up, you can set whether that's going to be run based on data for current month, current year, current quarter, whatever the case is. And then you generate those and run those allocations, either generate those on demand or you can set them up and run them on a schedule. So you're generating those. Those are typically things that are happening at month end. So you're taking a full account balance and allocating that out versus at the time that you're entering the transaction. Okay. So this is just an example of part of the allocation definition setup. So you'll see that there's some rationale up at the top. That's where you're going to give it an ID, kind of a name or a description, and kind of explain your methodology if you want to of what you're allocating and why. That just helps if you're going back and looking at those later to kind of determine what's included in that allocation. You can then determine in your dimensions, again, because those are going to be included in your transactions and in your account balances, whether or not you are going to use those as your allocation focus. So that's what you're intending to allocate based on. If you need to keep the different dimension values as they are in the original transactions or account balances, if they're not considered, so you're not worrying about those in this allocation. So you make that choice for all of the different dimensions that you're going to be using in this allocation and encountering. Okay. Then you're going to determine what your source data is that you're going to be pulling, that you want to base, that you want to be part of your allocation scope. So this is going to determine what you're going to allocate out. So in this case, I have it set up to allocate out my account group other expenses. So it's going to pull that account balance out for my other expenses. So that could be one or many GL accounts that are included in that account balance, and it's going to pull that total account balance. Then I'm going to determine the overall percentage of that account group that I'm going to allocate. So in this case, I've got it set to 100%. So it's going to take 100% of the balance of those accounts, and it's going to allocate that out into my other accounts. I'm going to base this on current month. And you can see I have the ability to do some true up activity. So I can say just the activity delta. So if it hasn't been already allocated out. So then if you're running it multiple times during the month or activities posted after you run it, it can true that data up. You can also have it set if you're running things like current year to date, you can determine if you want it to automatically reverse the prior month so that you're booking year to date, but that would be picking up any delta as well. So if something has changed in a prior month after you've run the allocations, it would pick that up in your year to date and post that into current month, but by reversing out the prior month, you're getting that net activity. So it's just allowing you some different options based on your time that you're going to run that on. And then you're going to filter based on any dimensions that you want it to pull for those balances. The next section in the setup then is going to be your basis. And this is going to be determining how you're going to split that allocation out. So I'm going to tell it in this case that it's dynamic and it's relative to another financial account. So you also will see in those drop-down options on that that it can be dynamic and relative to statistical accounts. So this is where I could base it on statistical data. I could base it on head count. I could base it on your number of trips, number of days sold, number of anything that you have in your system as a statistical data element. That's something, again, it's not static, so it's not staying the same. It's changing every month, and we're posting those statistical transactions every month that are updating those balances. This is going to then base that on that statistical amount. In this case, I have it based on pulling my revenue. So I'm going to base it on my revenue balance, and that's what I'm going to use as my basis for how I'm going to allocate out this account balance. Again, then you set your time. You can put any filters on for any dimensions as well. And then the last section in the setup and the definition of this is where you're going to post this entry. So where's your target? So do you want to post this to an account, a specific GL account? Or do you want to post it to the regular accounts that it's going into? So I've got a specific allocation account that I want to post the balance into. Then I want to tell it in that last section, that reversing, where do I want it to pull the data back out of? So I want to pull it back out of the source account So that means it's going to post my debit into this allocation account, and it's going to credit my original source accounts that it's pulled the data from. So that could be one or many accounts. So it's going to pull those out of those individual other expenses GL accounts and post it into that allocation account. Okay. Once you have all of the definitions set up and you're ready to go create these allocations and generate these, then you'll see a task on your task menu under the General Ledger module to go and generate allocations. So this is where I'm going to tell it your time period that you're going to run this based on and your posting date. So you're going to post this allocation to a specific GL posting date. And then do I want to run this as of what date? You can set up multiple allocations and have those defined, and then you can create a group of allocations. So if you have multiple allocations at month end that you're running, you don't have to go and run each of those individually. You can set those up in a group. And then when that group is set up, you can then choose in your allocation run type to run it based on a group instead of just individually running that. And then you would select that group and it would identify all of those allocations that it's going to run at month end. So you can make this very streamlined, have some groups set up in there and then run those, generate those again, or you can set these up on a schedule. Okay. Once this you've run these and you've got these generated, then you'll see that you have a log out there where you can see when these have run, the balance of those, the status of those, if they passed or failed. If you have a group, they could partially pass or fail because maybe it ran one of them but failed on another one. So you can see all of that status there. And then you'll see also a link out to the right if it's created the journal entry where you can see the path. You can see a view link there where you can select that, and that will take you to the journal entry that it actually created. So right there on that log, you can see everything that it's run. One of the really nice things about the dynamic allocations is you can kind of test it and see if you're getting the results you want. If you aren't, and you've got permission to set these up and edit these and delete these, you can go delete this allocation run. So even this one that has passed, I didn't grab this all the way to the far right on the screenshot, but you would have a column there where you can check that and delete it, and it would delete that run of that allocation and delete the underlying journal entries that it's created. So then I could go and tweak my allocation, make any changes to it that I want, and then go rerun that. So if you're not getting the results that you're quite looking for, you can delete that allocation run from the log, and then go fix the allocation and set it up and run it again. Check that until you get what you want. So if you kind of are playing with the settings a little bit to make sure that you're getting exactly what you want to for that allocation, then you can kind of do that over and over again until you get that just set exactly like you want it to be working. Okay. All right. And then just to show just kind of an example, the one that I created with the other expenses where it's doing that allocation, I just wanted to kind of prove that out and show you how that's working. So you can see over on the left is the journal entry that it created. What I did over on the right was I ran the Dimension Balances report. I ran their revenue balances for all of my entities, and then I just quickly dropped in a calculation to get my percent of my total, and then I took my other expenses total up there that you can see kind of at the top over in that far right corner, that negative 1.2 million. I took that and then multiply that times each of those lines for their percent of total. So I just did that calculation in an Excel spreadsheet just to prove out and verify the number. So you can see that it is actually taking my percent of revenue and determining what that balance is. And then it's taking that and allocating out that other expenses. You can see here for that that negative 163% allocation, that they got 1.9 million of the allocation. You can see that it's got a debit there in that location. And you can just quickly glance down and see that those numbers match up to my spreadsheet. So just wanted to kind of show you that proving that balance out, that it is pulling that other expenses total, that negative 1.2 million here, and you can see there it's debiting that because it was a credit on my expenses, and then it's allocating that credit out based on their percent of revenue. So just kind of proving that out and showing that validation that that is how that's working. Okay. All right, and then a couple of samples of some use cases for the different allocations, and then we'll get into the actual module and I'll show you some of the setup and go through those. The transaction allocations, some samples, some things, the use cases we've seen with those are maybe you're doing rent and you want to allocate that based on square foot of that office. That office size is not changing very often, so, or that size of that you've allocated to each of those departments within that office space, that's not changing frequently, so that's something that's pretty static, so you can select that and set that up at one time and then use that, select that when you're in a transaction. Or maybe doing an equal split between different departments or different entities. So I'm just taking my 10 entities and I'm doing a 10% allocation to each one. That's a static amount that's not changing, so I can set that up as a transaction allocation. So any of those static things that are not changing very often, we can set up as transaction allocations. The dynamic allocations, just as the title says, are a little bit more dynamic, a little bit more fluid. So those are things where they're going to be based on other balances. So maybe an overhead allocation based on revenue, expenses to departments based on headcount. So maybe you've got your different headcount and you want to take your overall corporate office expenses and office supplies, things like that, and allocate those based on headcount in each department. We can also use these kind of in an untraditional manner. It's not a true allocation of money that's already sitting on my expenses or my revenue and allocating that out. But what I can do is kind of calculate some balances. So for example, maybe you want to calculate a bad debt reserve based on your AR. Or based on your revenue. So you want to take 10% of your revenue and calculate that and put that as a bad debt reserve. So you can do those types of calculations as well. So it's not just traditional, in air quotes, a allocation of money that's already out there in your financials. You can kind of accrue balances and set balances up by creating kind of those different calculations. You can accrue percent of salaries as bonus. So maybe you say, you know, as a general rule, we're going to accrue 3% of our salaries or 5% of our salaries, and we're going to set that up as our accrual and accrue that for our bonus. So we can take that and do that calculation. So you kind of can think outside the box on those dynamic allocations of things that we can use that for. We can also kind of move money around in between accounts if you want to. So if I've got balances in this one GL account, and I maybe want to move that to another GL account for purposes of reporting. Again, remember, I can report with or without these allocations. So these are going to be posted into a separate book. So if I have a balance in one account and I want to move it to another account for reporting purposes, I can do that by using this allocation module. So you kind of think of things outside of the traditional allocation sense of the word that we can use this for. So calculations of balances, movement of balances into other GL accounts, things like that, so that I'm not necessarily having to manually go and do those calculations and do those entries. All right. So let's jump over and let me show you a couple of things here in Intacct and just walk through a couple of things, and then we will see if there's any questions. Let me just check. I don't think we've had any so far. Yeah, I don't see any so far. So, okay. All right. So where you will find all of this set up is here under the general ledger module and the setup module and under allocations. So you'll see if you don't have dynamic allocations turned on, because again, that is an additional subscription, then you'll see just transaction allocations there. So that's those traditional kind of static allocations that we can set up. If you have dynamic allocations, then you'll also see these other two menu items for allocation definitions and allocation groups. So we're going to start here with the transaction allocations, and I know I showed you a screenshot of some of the setup, but I just want to show you what some of that looks like. So I'm just going to show you this one that I've set up here. And you can see I've got this set up with a 10% split across 10 entities. So my allocation by is my percentage, and then I'm just going to set a 10% value for each of my locations or my entities. Again, as I mentioned, you can have other dimensions included in here. So I can include some of my departments. They can be different departments for each one. So it's really just however you need to set this up. The important thing with this in this case is it's got a total 100%. So when I get done, it has to be 100% that I'm going to allocate here. I can also do exact amounts and just assign exact dollar amounts that each of these locations are going to get. And then I can do that fixed amount with over under logic. So I can, again, use this to allocate out kind of that amount on that bill or that transaction, but then have that over under logic if it's a fixed amount that I want to assign everybody. Okay. Then when I am going to use this transaction, I'm going to go in either to a journal entry or to an AP bill, any of those different transaction types. I've got one set up here that's an AP bill. And when I go in and look at that, again, all I'm going to do is select that allocation method here in that allocation box. That little show details button that I said mentioned, if I click on that and scroll down, then you can see here is my allocation that it's done. As I mentioned, I can customize that. So if I need to change anything on there, I can, and allocate out a different percent and update that. And then you'll see now it's changed my allocation to custom because I've done a one-time customization on that. It is not going back again and changing that original definition and editing that. You have to go in and edit that definition if that needs to change, but it does allow me to do a kind of a one-time override if something happens and I need to change something on this specific bill that I'm transacting. Okay. And then you would just process that normally, go ahead and post that, submit that for approval if you have approvals turned on, and go through and pay that bill, et cetera, just normally. Okay. All right. So then the transaction definition is pretty easy, straightforward to use. You just set those up and then available on your transactions. Your dynamic allocations, again, those, when you set those up, you're going to go in and actually create that definition and what it's going to do. So I've got two set up in here that I'm going to show you. This first one is just that expenses one that I had the screenshots of in the PowerPoint. So that one's going to go through. It's going to take my other expenses amount. It's going to allocate 100% of that account balance. I could just allocate 50% or 75% of that account balance if I wanted to. So you define how much of that balance you want it to allocate. It's going to do that based on my revenue. Again, as I mentioned, I can change that and do that based on statistical accounts, and then select my statistical accounts to include or to base that on. In this case, I want it to be based on revenue. I want everybody to get a percent of their revenue for their expenses. So I'm going to base that on financial accounts and then choose that account group. Okay. And then that last little bit is where this is going to go. So where is it going to post this journal entry? I'm going to post it into my allocations GL account, but I'm going to reverse it out of the original source account. So that line is going to now net to 0 when I do my combined 2 books for my financials, and I'll see the balance in that allocations GL account. Okay. So the other one I want to look at and spend a little bit more time on is the AR calculation for bad debt. So this one is, I didn't have the screenshots in there, but this one is going to be a little different in that it's not taking a balance in the account and allocating that balance out. I'm going to actually create a balance, if you will, in here. So I'm going to just, again, set up my rationale. In this case, I want it to stay within the same entity that it started in. So I don't want it to cross between entities because I want it to pull the balance, and then I'm going to calculate a percent of that and post a new entry. So in this case, I'm going to take my accounts receivable and I'm going to allocate out. I want to calculate 10% of that. So I'm going to calculate 10% of my accounts receivable and post that as a bad debt reserve. So I'm pulling again my accounts receivable balance, and I'm going to allocate 10%. So that's how much it's going to calculate is 10% of that balance. Okay. In this case, it's a little bit deceiving because I'm not doing this relative on another account. I'm actually just calculating 10% of that. But you still have to kind of populate this basis section. So I've just said do it on the same basis of the same account group, still my accounts receivable. So I'm really not taking it and allocating it based on another account. Okay. Then I'm going to tell it where I want it to book this entry. So in this case, I'm going to have it booked to a bad debt expense. And then instead of using my source account and reversing it out of that, I actually want it to book that credit to a balance sheet account for my bad debt reserve. So it's going to create a balance of 10% of my AR account activity, and then create that GL account or GL journal entry, for 10% of my AR activity that month and post that in my bad debt reserve. So I'm just accumulating that bad debt reserve based on 10% of what my AR for that month is. Okay. So if I go now and look, you can see I can set up allocation groups. I didn't go through that and show that on the slides, but you can create a group of allocations. So when you do that and set those up, you can tell it if it needs to stop if one of the members fails. So let's say you've got these set up in an order where they're kind of dependent on each other. So I need it to run in this order, or my data is not going to be correct. And if one of them fails, I need it to stop processing. So don't keep trying to go and do the other allocations because they're not going to be correct if for some reason one of them fails. So you can tell it to stop, or you can tell it to skip that one and keep going. So that sometimes you may have to kind of look at what those scenarios are where it may fail. So it may fail if there's no source balance. So if it's looking to allocate a balance and there's no balance there to allocate, that's going to fail. In that case, it's probably okay to skip that and keep going because if it's a $0 balance, there's nothing there to allocate out. Okay. But if it's something where I am doing a bad debt reserve calculation and then I need to allocate balances out of that out of expenses, and those need to be included in there. Obviously, if that one fails, I need it to stop and not go on and proceed with my other one. So you can let it know how you want it to be treated. Do you want it to stop, or do you want it to skip that and continue on? And then you'll tell it all of your allocations that are going to be included in your group. So I can set all of those up and say, assign those to that group. And then I can just go run that group of allocations for the month versus running them individually. Okay. And obviously you have to give it a name and a description, just like everything else in the system when you're setting it up. All right. Then to run those, when I'm going to go under General Ledger and All, and you'll see account allocations here, and I can generate that. Again, you saw the screenshot of this. So I'm not going to spend a lot of time on this, but you'll pick your dates here, your allocations or your group allocation that you're going to run, and then you'll click on this generate button and it will go out and process those. So I've already run the couple that we were looking at just so that you could see those. So I've got the other expenses here. And this is the one I had in the screenshots where I did in the PowerPoint where I kind of proved out this journal entry. So you'll see this same journal entry here. So it's pulling it out of my source account, so out of my other expenses GL account, and it's applying it to my allocations GL account and spreading that out based on that percent of revenue, which we saw. So that allocation is just doing exactly what we told it to do. Go pull that account balance and allocate that out based on our percent of revenue. Okay. So this other one is creating that bad debt reserve. So in this case, don't have a lot of activity in this demo database here, but I've got a little bit here. So you can see it's taken now and it's created. It's 10% of my AR activity for the month, and it's taken that and it's given each of these entities, because I told it to stay within the same entity and not to cross entities. So each entity, it's looking at individually what their activity is, calculating that and posting that back, and it's going to post to my bad debt expense and offset to my bad debt reserve. So I've created that journal entry out of balances for my other transactions and other activity in the system. Okay. So that, again, is kind of that out-of-the-box way of using traditional allocations. I'm not taking a balance that's existing already and moving that. I'm taking a balance and doing a calculation based on that and creating more transactions. Okay. And then, again, I can set these up as recurring allocations. So you can, just like recurring journal entries, recurring AP bills, I can create this. I can tell it when I want it to start, my frequency, and when I want it to end. So do I want it to end at the end of this year? Do I want it to repeat by days, weeks, months, or years? And then I can select my allocations or my group allocation, and then I can have it allocate this through period end, which again is when you're closing those periods, so you can have it set to do that. And then you can tell it, create this recurring schedule, so then it's going to just generate these allocations on this schedule and create that for you so that you're not having to run those manually. I'll be completely honest with you, most of our clients that are using this are running it manually because they're just not real sure when they're going to be done with their month-end transactions and be ready to do these allocations. It can vary each month. So they're running them manually, but you can put them on a schedule. Okay. All right. Let me see if we have any questions. All right. I don't see that we have any questions. If you do have any questions, though, here's how you can get in touch with us. Our Intacct support at microaccounting.com. Our phone number is there. You can reach out to me or any of our consulting team directly. So anything that you have questions on, allocations or otherwise, please feel free to reach out to us. Here are some upcoming webinars that we have. If you are not getting our newsletter, please reach out to one of us so that we can make sure that you are getting those and you can see those webinars that are coming up to register for those. Even if you can't attend that live time, register for them, and then you'll get a link to the recording that you can watch it later. These are also all posted out on our website, so you can always go back and watch any webinars that we've hosted previously. and watch those. So if there's something that piques your interest that we've done before, feel free to go out and register for that, and watch that. And again, here's our upcoming webinars, so you should see those coming out soon to register for those. Thank you so much for joining us. Appreciate your time. And if you have any questions, any suggestions for anything that you would like to see us do in a webinar in the future, please feel free to reach out to us and let us know. Thank you so much, and I hope you all have a great rest of your day. Take care.